I've just opened up the document. You can either get it from the link that I shared. So a couple things that we normally do. We talk about our weekly positive thought. I like this one this week. We must wage an intense, lifelong battle against a constant downward pull. If we relax the bugs and the weeds of negativity, we'll move into the garden, take everything away of value. That's a motivational speaker. His name's Jim Rohn. You know, it is so true, at least in the world of trading. There's so many things that go through our mind, the fear and the greed and those thoughts. You have to be positive. There is I do want everyone, if you would take a moment to read this paragraph. There was a good man in Chicago that I knew for 26 years who passed away last week. Bud was a very special human being. I can't even guess how many people he had helped, from homeless to, I mean, he worked for himself, and he did a lot of volunteer work, and he never advertised, complained. You never knew if he had a problem with his knee, his hip, his heart. Bud McMahon was a very special human being. He will be missed, and there are thousands, and I mean literally probably tens of thousands of people in the 26 years that he touched. He would go into O'Hare, just to give you an idea, in the wintertime and help homeless people that were down there and find them shelter when it was 40 below wind chill factor and the police were kicking people out. If you know where I'm talking about in O'Hare, if you ever parked your car and you'd have to take that little underground tunnel, Bud was just different, special human being. In any event, he will be missed. So thank you, Bud, for all the human beings and the lives that you improved, that you made people at least give them a chance and gave people dignity back and gave people a chance to become happily and usefully whole back in society. He did an amazing, amazing job, an amazing human being. And we find those people once in a while in our lives. And he was one of those, and he passed away last week. His funeral services will be this week in Chicago. In any event, last week, every single stock index rallied. And, excuse me. Sorry for that. We had a few things that happened last week. We saw the market move sharply higher on all the spectrums of the markets. We had a few good plays based off of Twitter, a couple good trades that we posted. And one of the things that I wanted to make mention is that this week we have so many earnings out that will be big earnings. Akamai Technologies. We have a lot of different trades that I like this week, which we'll be posting on Twitter, and I just want to go through some of those names. But we also have a few things. The FOMC announcement out. But if anyone's been bored or been on vacation or have had surgery, and we wish a great recovery to David in our room who had shoulder surgery last week, and boy, ice does wonders. So we want to wish everyone out there who's gone through some times last week, if you've been on a vacation, I think we got another what I referred to as a wild headline news week. It's going to be pretty wild. There's something here for everybody. And if I see more, I will tweet those out. The reports today, pending home sales, Dallas Manufacturing Fed survey after the close today. We've got some fairly wild markets, which we'll talk about during the day. Amgen is pretty wild. Buffalo Wild Wings, which had a pretty wild earnings miss last time. And again, Twitter comes out after the close. Caesars Entertainment comes out after the close. And so looking at this week, we have also on Friday, I believe it's, one of these days, excuse me, I thought I saw Win come out. I could be wrong there. I'll double check that. And that's why we do have to double check release times. But for the most part, I try to post the main movers in some of the ones that we want. Exactly Tuesday, and not Friday. Tuesday, Win comes out. on Friday, it's almost like an energy conference between Chevron and Exxon coming out. So Groupon comes out, LinkedIn comes out Thursday, Facebook comes out. I mean, this week, LifeLock comes out, MetLife comes out. There is something here for everyone, and we'll take a look at all of these stocks to find out if we get a decent setup from both chart perspective and looking at volume perspective. The last one we did was QLogic, which just had a great move. But I'll tell you what, last week there were lots and lots and lots of earnings that really had surprise effects. 8, 10, 12, 15% moves, which are unprecedented for, and again, for the last 8 earnings cycles, we've had big moves. I mean, who would see Yelp down 15%? Microsoft was up. I mean, they become binary events. Really, they do. And I think one of the techniques is, since everyone's looking at weekly options, one of the things that I've liked to do to buy us time, if I like the company itself, just because it has a poor earnings does not mean it can't rally. And so we did a bunch of things in the January options to give us a fighting time, if that makes sense. So while a lot of people are looking at weekly earnings, I think weekly options are good for selling premium in certain events. And I think with the implied volatilities that go, as an example, if the 52-week implied volatility is like 30, we see implied volatility on weeklies at 165, and January's might be like 25. So for options traders, you know what I'm referring to, and so that implied volatility can skew the valuations of the options. Another thing that we have to look at, and we have a lot of great ideas and a lot of great movements that we want to participate in, but when we get right down to it and we look at the bid and the asks, when you have a bid and an ask 40% of the value of the premium, it makes it very tough to want to get in that vehicle for that trade. So while there are some big moves, sometimes you got to ask yourself, is the execution, are they available to get in? Number one, because if it's hard to get in, it's going to be hard to get out. Number two, is it something that you want to hold, or is there an opportunity going forward? And that's always been my style. In the meantime, I'd like to point out with the advanced decline and the commitment of traders report, the advanced decline popped its heads. This is a daily chart on the ES. You'll note on a weekly chart we did pop our head up, which had a nice move on the weekly charts. So it was good confirmation. We popped over a moving average on the advanced decline on the weekly S&Ps. Now, relative from a point A to point B, this shows that there is resiliency and strength in the market, but we've got to anticipate a little bit of a pullback. The one caveat and negativity in all of this was last week. If you'll note, what I'm trying to point out to is it was just very light volume in the S&Ps on that rally. So that rally, even though the amount of stocks, and that's what the advanced decline shows us, was healthy, the volume was not. We need to watch that over the next 2 weeks to see, or 2 periods. So if this is a weekly chart, you got this week and next week, 2 periods go by to see if we get the market holds specific support, and I would say, if we got back to 1912, 1911, 1909, somewhere in that zone would not be a detriment to the market. I would like to see support come in somewhere in that zone in the next week or two. It possibly can. We see that the small speculators, according to the commitment of traders report, and again, this was as of Tuesday's report data. So from Tuesday's close, we do not know what happened from Wednesday, Thursday, Friday, but as of Tuesday's close, it reflects that the small speculators got long the market again, and that the hedge funds and the commercials are short. So the longs right now are controlled by the general public, the small speculator, while the hedge funds and the commercials are short. Again, that's as of Tuesday's trade. So when we go back and we say, what happened on Tuesday? So we go, Tuesday was this day right here. So as of Tuesday's close, if I'm not mistaken, Tuesday's close, the market was at 1939, well off its lows here at 1813. So while we did see an appreciation to the upside, it does not show that maybe the general public got stopped out, or in fact they most likely added to their longs. But they went from long the market, and what's interesting is this time around they actually dumped a huge amount of longs near the highs. As you can see, the reflection shows that they went from a net long position of 217 to almost flat the market, but they never went short. And I would be a little bit more excited about a bottom in place had they been actually short down here and look for the commercials and the hedge funds to have gone long. That to me would have been a more meaningful move in the marketplace. I'm not saying that the small specs are wrong a lot, but for the history that they have, I would be a little bit more confident in the market making a sharp, faster rally had this been a difference between whose hands the leadership of the market is in. When the leadership long, that is in the hands of the small speculators, to me it's not in strong hands. So with that said, I would imagine that we are going to see a pullback when we take a look at our pivots for the week. You know, anywhere from 1917 to 1909 might be a realistic pullback in the marketplace. This light volume was kind of a detriment to the market. Now, we take a look at the Russell real quick. And the Russell, interesting, the Russell, we saw a huge amount of volume pour into the Russell. As I can share this even on a weekly chart, we just perked our little head there in the advanced decline over a moving average for the weekly moving average on the Russell. So if you note here, even on the volume analysis, and this is using the futures, we actually fared a lot better if we compare an apple to an apple. Where was the market on a closing basis just 1, 2, 3 weeks ago? Price close was here, and just to give a quick lesson, the volume level was there. So clearly we could see that there was a lot more volume coming in for the recovery of this rally. The recovery of the rally had more volume and good breadth participation in the Russell. So this does not look and have the same similar makeup of the S&Ps. If I change and go back and give you an analysis of what I mean, 1, 2, 3 weeks was just to compare an apple to an apple, we will note that this was the close. Where was the volume levels? And as you can see, we didn't even get back to the levels of volume not just 3 weeks ago. We didn't even get back to the volumes from 2 weeks ago. So price is higher, but the volume didn't even surpass the prior 2 weeks volume levels. So if the market was, in my opinion, going to be enabled to see a more stronger follow-through to the upside immediately, I think we would have seen a better participation rate as measured by volume. That is my analysis there in a comparison that it seems that it is time, or at least we are seeing evidence, significant evidence, that there is money coming into the small cap growth stocks. Let's take a look at the NASDAQ real quick together, and as you can see on a daily basis, we made new highs on the advanced decline. So it just perked its head back from where we were at this level right here. If we go back in time and say this was the strongest level of a close, we got a little bit of divergence that day. We were starting to get bearish up in that zone there. And then if you note, where's the volume in all of this? So while the AD line suggests that we are the NASDAQ 100, a lot of stocks have come back. It's a little, to me, a little scary that there's just a lack of volume participation in this market movement, and so we have the same construction makeup in the S&Ps of lack of volume as the NASDAQ. So it shows there was more market participation volume-wise last week and the week before in the small cap growth sector. So that to me says that we've been kind of looking at spread relationships of the Russell versus the rest of the market. So don't be surprised. This is the information. Typically we get a clue or guides of if the market's going to go down, the Russell leads the way. It's been working that way all year. But I don't think that with the Russell, based on that volume analysis, I don't think the Russell is going to be the downside leadership as much as perhaps if there is the market going to, as we are now in our pre-market session, breaking down below 50. We're trading at 1949. So the rally in the stock market wasn't able to be sustainable. So the fact that the small specs are holding longs, the fact that there was light volume, it leads us to believe that you're going to see some pullbacks. But I think the pullbacks will be more shallow in the Russell, number one. And number two, the breadth analysis also signifies that this market here is just going to need some time to digest this overall upside market. I do not think that we have the crash of the millennium continuing. I believe the bottom is in for now, and that we should see as we get through the month of complete this week with the Fed, we complete this week with earnings, we complete this next 2 weeks with the, of course, the elections, and then we get into, how do we trade for the rest of the year? And so my focus is going to be on some earnings events and watching some stocks there, B, some small cap sectors in the materials, industrials, and we're going to focus in that because that is really a strength and leadership that we see this time of year, and so that's what I'm looking forward to for that. As far as gold back down at 1228, you can see gold down at 1228. And an individual asked me about gold last week, and we had a really smart move in soybeans, a very sharp move, and we'll get to beans in just a minute. When I take a look at gold, the one thing that bothers me is that, number one, it is in a seasonally weak period of time right now, but there's a lot of people out there that still believe that, with the way the Feds on a global scale have been pumping money, and I want to get into more of a fundamental point of view, but I'm just going to talk technicals. On a weekly close, we need a weekly close above, now if you look here, this last conditional change candle, this high here was 1272. The prior week we had a high of 1243.20. 1243.20 has just been so important. And if I can just line up 1243.20 more or less, I'll just go 1240, close enough for 1243.20. There we go. If you noted 2 weeks ago, we closed close to that number. We closed at 1239. We need a close over that last conditional change. I would say that if you note that we have a nice little descending trend line, a lot of people are looking at that. We haven't closed above that down trend line. We haven't closed above the last conditional change, which really marked significant selling. The market really hasn't gotten above that high level yet. So if we do close above 1243, and if the market does manage it, I can suspect that we will see a breakout to test the 1320 one more time. If anything, we're in, maybe if I point this up, on average, if you take a look, we poked our head above this little trading range, as I can see, and that's about the best that I'm going to say that gold is in a little defined trading range. So if it's going to go back up and test the upper end of the trading range, it's going to have to come from a closing breakout above that 1243 number and that descending trend line. On the other side of the coin, a weekly close below our last conditional change to the downside, which is 1222. That, to me, is another a disaster in the making, because if the market was going to be strong, we would have seen a push of more volume, and we're not. And so the fact that gold is actually in a seasonally weak period of time suggests that we could come back down and test the low end of the range one more time. What would it take for that to happen? Maybe a rally in the stock market. The Fed can certainly do something, but this week, as you note, the Federal Open Market Committee has the power of changing the markets, and we are, as you know, the Federal Reserve has completely, eliminated quantitative easing, and now we got to ask ourselves: are they going to maybe reenact it, or are they going to at least delay in giving us why or when the next hike in interest rates, or the change in a zero interest rate policy, because in effect that's what we have, or negative real rates after inflation. When are we going to change these things? And at this point in time, that's anyone's guess, to be truthful. I don't know if the Fed really knows what they're doing. So all I can look at is technical analysis and say, Is the rally on good volume? No. Is in gold. Is if we do get a pop in a market price above 1242 and it's on good volume, I suspect that we're going to see a stronger move up to the 1320 handle, and that I can say. So for this week, I think the leadership is going to be, you're going to want to watch the Russell and small cap leadership stocks. Looking at the bond market here, the bond market gave us quite an interesting setup in the fact that we are in a PPS sell mode. We closed below the low, this defending low. We closed below this defending low in the market, this huge shooting star, which will be, you know, as many of you know, we tried on that day, in that minute, within minutes, that market moved off that high. Within about 3 minutes, that market moved off that high by about 3 handles. And we were at that point in time trying to do credit put spreads in TBT or credit call spreads in TLT. So my longer term analysis on the bond market with that just incredible shooting star, I would have been worried had we had a close over these highs, and we never did get the close over these highs. So people will be saying, hey man, we didn't get a close over these highs, but that's great. On the other side of the coin, on a weekly basis, we didn't close underneath that low either. So for me, I'm looking at this market actually posting, if you just eliminated that maybe hyperbolic greed, I'm not sure how to call it other than a blow off top, but that shooting star was very evident. And I would have to say on a longer term scale, you ever see the market close and generate a weekly close underneath that candle's lows for the week, then I think you're going to see immediately or within the next several weeks a return to maybe the longer term trend of bonds, which should get us back to, or the intermediate term trend, shall I say, since the beginning of this year. The interesting aspect is as the Feds reduce quantitative easing, people have been buying bonds. So, you know, as interest rates eventually do rise, and when the Fed says, yeah, we're going to raise rates, this thing is going to plunge, and no one, when it does make that type of move, no one, remember, bonds used to have a limit. They used to, when I was trading bonds back in the 80s, they used to have a 3-handle limit. They eliminated the 3-handle limit. There is no limit in bonds. Bond prices on commodities, we have a limit, meaning they can only go up or down so much in a given day. Bond prices have no limit. Soybeans have a limit of 50 cents. Bonds have no limit. So with no circuit breaker, so to speak, in the bond futures, this could be an incredible move that could come on the first signs that the Fed going to raise interest rates. And I don't think it's going to be this week because they already addressed that they are concerned about the weakness in Europe. So anyway, we want to be on guard, and I think everyone should have a longer term position in bonds, longer term between now and say March, at least February, March expiration, because I think that we will see that eventual turn. We are seeing a lot of pockets of healing in the stock market, and if we get the stock market this week, next week, down to like that 09 area, wherever the bonds are, that might be the last rally high we see for the year, in my estimation, in the bond market. So I want to be positioned going forward in that. And again, if you are a part of, have signed up for our tweets, we will certainly send that out to you. One thing I wanted to also go through real quick, and I know we only have a few more minutes here, was to look at our RS analysis, relative strength analysis charts real quick and say, okay, Europe's down, Germany's down, Italy's down. We all understand that, you know, the world's stock markets are moving lower, but how much lower are they moving? And are they recovering yet? And so if we take a look here real quick together, this chart, this relative strength performance chart, and I want to kind of get this up to see as just a relative comparative strength of what is happening here around the world. So we have blue is the Dow, the spiders, S&P 500 is green, emerging markets is that fuchsia, Barney purple color. Germany is this orange, brown, darker brown color. Italy is red. Malaysia is dark blue. France, EWQ is orange. ILF is Latin America. So the interesting aspect of the worst performing stock market at one point was Latin America over the last 2-year period of time. And as you can see, Latin America is back to positive by just a tad. Germany, which was one of the better performing markets, we got in a disconnect back in July. Something happened in July, and we were talking about this. So while the stock market in the U.S. was going up, we saw almost every single stock index, Germany, France, Italy, Malaysia, was moving lower. And we said, listen, that ain't going to last forever because there's just a disconnect. So all of a sudden, we saw more continued weakness as it occurred in September. As the stock market here peaked out, everything else accelerated to the downside. We've seen now Germany, the EWG or top stocks in Germany, down 11%. It was down 15%. So it has not had an amazing recovery. Germany and France, these two countries have not had an amazing recovery, but Latin America has, and interesting aspect is Italy has. And since when does Italy lead Germany? It's kind of, I guess that might be a talk of the town. But I can definitely say that if we start to see more recovery, and I think everyone, it would behoove you to take a look at the EWG and watch the chart patterns of the EWG. It's an ETF. You can actually trade this as an ETF. And over time, I think Germany should start to see some type of recovery. And of course, if they do not, and we are an internationally interconnected global economy, how do we expect continued sales and robust sales from U.S. conglomerate corporations overseas? So there is a reason to be watching the EWG and week to week. I wouldn't say every single day, but you can, we will, and we'll be posting that here. Last but not least, the relative strength performance in all the sectors, and that is the opening bell. The relative strength performing sectors, worst performing sector going back year to date is now XOP. Keep in mind, XOP, oil and gas, this is a seasonally weak period of time for them. Things change towards the end of November. So, you know, while we do see the KBE, which is regional banks, saw an amazing move. We went from only being up 9% year to date to up 23%. This is the KBE, the regional bank, the biotech sector. The biotech sector last week had an amazing run. The KBE, which is down here, had another opportunity for recovery. So looking at the KBE, regional banks, this is one that we're going to start to look at from a small cap perspective and banking sector. So we start to see banks start to do a little bit better. We start to see an environment that if the economy is going to start to heal, it should come from regional banks, which are small caps. So we might get a double whammy there from strength in small caps and strength in regional banks. Now, the Fed's coming out this week. Regional banks, there's a couple earnings coming out. We'll discuss that. But for some decent plays, if we're looking at how much can one stock segment move up, or if we're looking for sector rotation, that's why we want to look at seasonal strength and seasonal weaknesses. Seasonal strength, when we take a look at this, if this makes sense to you, we're going to enter a seasonally strong period of time for the market in certain segments. One segment is retail. Retail spending starts to appreciate. And the XRT and the consumer discretionary XLY, those are two segments that are still negative on the year. And while they did recover last week, they are very strong segments of the markets that have a lot of potential to the upside. So for this week's planning and scanning, watch your tweets. We're going to be looking for the Russell not to maybe bring leadership to the downside. I might have that, you know, there's always a chance we're wrong, but based on that volume analysis, friends, there was a lot of activity that went into the Russell. So that concludes today's planning and scanning, and just to give you an idea of what we are looking for and why. One last thing I wanted to point out, as we always like to do, is what was the condition of the market last week's strength? I wanted to see if this thing was really sustainable. We should have seen a zero line cross in the weekly McClellan oscillator, and we did not. In fact, it is, and that's why I suspect we will see a downdraft in the market. Now we have another indicator that suggests that we could see another downdraft. Prices made higher highs, but the McClellan oscillator made a lower high, and the weekly is below the zero line. Now, let's take a look at the daily. The daily got a little bit well overbought, and so it could see some liquidation. And so that's where I see the potential for a pullback on at least evidence, not just my opinion, evidence that says we could see a pullback. And if the market's going to maintain strength, it should be, you know, somewhere in the 1906 to, let's call it 1920. You know, that's really only 14 handles in this environment. That's, you know, 20 minutes worth of trading, to be truthful. So if the market gets back, you know, somewhere, and this is a little moving average here, which is flashing around 1908.25. So, you know, maybe the moving average moves up in time. So somewhere around in here, we'll look for a pullback. But rallies, I think, for right now, between now and Fed Day, rallies can be sold in the market, especially in the S&Ps, as well as looking at the Dow. So with that said, I wish everyone a great week. Thank you all very much.